Hello and welcome to Crypto Weeklies. In this video, we'll be discussing the recent crypto Carnage and we'll be also analyzing the crypto accumulation using Bitcoin as an example. None of the content is financial advice. So let's get started. Right now, the price of BTC is below 90k at around 88,900. It's below the 20-week simple moving average and the 21-week exponential moving average. The lowest of those values is at around $89,700, so about $1,000 short of the moving averages. Now we can focus on the Bitcoin price action, and also analyze how this looks with respect to the risk level. So this is Bitcoin SMA risk based on 20-week moving average, linear and proportional analysis of the risk of accumulation of Bitcoin with respect to what the price is doing relative to the 20-week moving average. The risks from early December of 2024 have dropped monumentally from 80% risk of accumulation, now less than 40%. It's in the green zone or in the accumulation zone starting as of day before yesterday, February 23rd. That was the last day where the risk was higher than 40%. Now risk is at around 30% or so. You can see that this analysis divides risk of accumulation into the chunks of 20%, and the recent price dump has put BTC down in the accumulation zone. We haven't seen this kind of environment since accumulation environment since October of 2024. October 26th of 2024. Back then, the price of Bitcoin, if you go over here, October uh, was at around the week. I think it's in this week at around 73k when it finally took over the March all-time high. At that point in time, that was the per hour analysis. That was the last iteration where the price, if you look at the 20-week moving average as well over here, the red line, you can see that the price started to take off away from the 20-week moving average starting October 24th. Now the price has dropped or come close or drop below the 20-week moving average, signaling this accumulation zone per the analysis. If we look at ETH instead of BTC over here and try to come to conclusion where ETH is and potentially where the rest of the altcoin market is, because ETH is the second highest crypto by market cap. In the December rally, it did not go to the highest risk band above 80%. It kind of topped at around 63% risk. Now the risks are coming at around 22%. If they drop any further, they would drop below 20% and go to the lowest risk, or the best time to DCA ETH is usually at that point in time. And you can also make the case that if BTC is slightly higher risk than ETH, then ETH is slightly lower risk than altcoins. And again, you can see in June of 2022 when ETH price was sub $1,000. Again, if you can check it over here, what price of by the way, this website, all of the content is available for free. In July 2022, the weekly average was at around 1100, but you can check the wick for those time periods. The price action went that was in 2022. The price action in June went below $900 at a point at around $850 or so. So that is also one indicator. And again, you can also relate this accumulation with respect to the 20-week moving average. This red line, that right now is coming in at around 3000, whereas ETH is sub 2500 at this point in time. If we focus our attention to the recent dump in the wider crypto market, you would find that most of the alts are down more than Bitcoin and ETH. You can see over here, over the last 24 hours, BTC down 7%, ETH down by 10%, XRP more than that, BNB is slightly doing better, Sol more than 10% drop. These are Tether and USDC are stable coins. So Doge, you get the idea. Everything is down. Most of the things are down more than 10%. Signaling the risk reward in the wider crypto market, where Bitcoin offers the best risk reward at this point in time, followed by higher capped altcoins such as ETH, Solana, etc. And then you go down the risk curve, and there are some good rallies, but again, overall they are not doing that great. Considering the phase of the market cycle right now, the bull market completion as of the day before yesterday, 23rd of February. This is price based completion, not time based completion. Only 37% completion, and this is not a linear process by any stretch of the imagination. In December, when Bitcoin was above 105 or 107k, in that range, the completion of the bull market at that point was at 60%. Now this has gone down to now as of yesterday at around 32%. Again, this timestamp is as of day before yesterday on 23rd. That was at back then the completion was 37%. Now it's less than 33, so less than 1/3 completion in terms of price action, and with the market cap of around 3 trillion, if the slightly less than 3 trillion, if the completion is less than 1/3, so you can make an estimate for when the market cap reaches around between 8 to 9 trillion. That's when this analysis could trigger 100% completion. You can see this triggered 100% completion quite early in May of 2021. That again did not wait for November peak, but again in November also the risk levels went higher than 80%. So that is a great time to DCA out of the market. The great time to DCA is when the risk colors are either green or blue. Blue signifies anything below 20% risk. Green is between 20 and 40% risk. We have been in this green zone for most of the February of 2025. Again, if we drop any more, and again, if the higher cap coins such as Bitcoin and ETH drop, then we might see a run back to this zone that we witnessed as late as November 5th of 2024, where the price based risk was for the entire market was less than 20%. So that's where the current dump in the market takes. Again, you can see that in terms of the TLDR indicator, based off the news based analysis, you can see there are a lot of red over here. That means that a lot of bearish news, such as bad news for Bitcoin. Again, these are some of the social media related titles as well as news articles related to crypto. Again, what is holding us back? Again, a game over for crypto. These kind of narratives are popping up. Overall sentiment score is slightly bearish, again slightly bullish, but you can see that a lot of neutrals and some bullish news over here. But again, the narratives of the bearish nature are of a higher magnitude, and some of the narratives get stacked. Again, although this points to more than cumulative points to more than 100%, again the magnitude of the narrative is 52%. The 95% bearish at around Bitcoin price action could fall as low as 70k. That is one prediction made by one of the analysts. Again, all of the sources are available over here in the indicator section. The peak value indicator is what we just saw under this area, where we look at the bull market completion based on the risk based analysis of top cryptos, based on how they are doing on their volatility, risk levels, risk adjusted returns, or Sharpe ratio, at alpha and beta and percent drawdown. These kind of analysis again available in the description also, to ascertain what is the purpose of this analysis. All of the content are available on cryptoweeklies.com. And if we do any further analysis of the narratives, one good place to start is the narrative word cloud. Takes into consideration the social media based narratives, such as on YouTube and X, what are people discussing with respect to crypto, analyzed by our machine learning model. Most of the narratives, again, this is last 7 days worth of moving analysis of what are some of the increasingly discussed hot topics. Again, Bitcoin being the most actively discussed topic, also XRP. And again, as of the last 7 days, the overall sentiment was bullish. Again, there are bearish sentiments picking up in the market. Again, they haven't quite reached the critical threshold uh, to become the most popular narrative. But again, you can see some of the higher capped cryptos such as Solana, Bitcoin, Ether, Hedera. Those are the narratives at this point in time. Lower capped altcoins are much smaller narrative than they were over the course of last 2 to 3 weeks. Also, meme coins are popping up, but again, I believe that is not for the right reason. There are a lot of scams associated with meme coins in general that are popping up into the surface. Also, a hack related to the centralized crypto exchange of about more than $1 billion. So that those are some of the narratives right now. That's why over here the billion is one of the popular narrative. So this gets updated every single day, looks at the last 7 days worth of news and tries to summarize it into the popularity of the narratives and what the social sentiment is looking at as a composite of the last 7 days. Again, this is kind of a lagging indicator in terms of this bullish sentiment, which is not felt in the market at this point in time. But again, I would imagine for if we update this tomorrow, the size of the bearish narrative would go up. Again, as a heat map or the barometer analysis of where everything is with respect to each other, what are some of the still rallying cryptos. Again, the left is towards the left is the higher performance, to the left the right is the leading or a lagging performer, such as over the last 24 hours who took the biggest hit: BitTensor, then HPower, XLM, Tron, Graph, Near, ETH took a heavy beating, whereas in the last 7 days Maker has been doing the best. Again, you can check it out on other platforms as well. But again, what we do over here is keep everything in one barometer. Over the last 30 days, again, Maker has been a decent performer. Over the last 90 days, XRP is offering the best return over the last 90 days. So overall, you can see that most of the cryptos are down over the last 24 hours, as well as 7 days, over the last 30 days, as well as the 90 days. That is kind of signaling what the market is doing at this point, kind of cooling off. Let's see if in terms of the technical levels of somewhat of a significance for, let's say, for ETH, is that if ETH continues to hold above this $2,412, that would still be a key level to watch for. In terms of Bitcoin, which is again the industry leading crypto, again, the most of the consensus is at around this $73,000-$74,000, where if it reaches that kind of level, that would be testing the March 2024 high. Again, could be exactly 1 year after those middle of March highs, if the market does not hold this bull market support band of 20-week moving average and 21-week exponential moving average. Other scenarios that could pan out, if there is similarity between what is happening right now with what happened in late April or late June of 2024, where price touches this band and then goes sideways from June to, let's say, October, in terms of the number of months. That would be somewhere May, June. So again, from June it would be July, August, September. So about 3 to 4 months from over here would be takes March, April, May, and June. Late June or early July stays within this range at towards the end of June or early July, and then breaks out after that. That could be one possible scenario as well. So with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.